Good morning. How to get the best mortgage in a competitive market. And buying a home in a competitive market can feel like things are stacked against borrowers and multiple offers with tight timelines and volatile rates and aggressive lender marketing. The reality is this: the best mortgage is not just about the lowest rate, it's about the strategy, the execution, and the structure. So here's how savvy borrowers consistently win, even when competition is intense. So, number one, start with a fully underwritten pre approval. A basic pre qualification is no longer enough. Never really has been enough, but sellers and listing agents want certainty. And what matters most is income, assets, and credit are fully reviewed. And automated underwriting definitely needs to be completed. And a lot of folks skip that step. But conditions limited to appraisal and title, and a strong pre approval position puts your offer in closer to cash as far as the seller's eyes are concerned, and often beating out higher priced offers with weak financing structures. So, number two, understand how credit scores really affect rates. One of the biggest mortgage myths is that checking rates hurts your credit. In reality, mortgage inquiries within a 15-day window count as one inquiry. And a lot of times people use soft credit nowadays too, so that's an idea. But small credit improvements can also materially impact the pricing you get on your mortgage. So paying down revolving credit card balances often matters than closing accounts does. And strategic credit optimization before locking in your interest rate can save you thousands over the life of your loan. Number three is lock strategy beats guessing the market. So trying to time the bottom is rarely successful. And smart lock strategies can include, and this is the one I recommend first and always, locking as soon as your property is under contract. That way there is no question on where your rates are going to be. But you can also use float down options when available, which means if rates go down in between when you lock, you can get the better of the situation. Now, the best rate is meaningless if it doesn't close on time. So make sure that you handle all your paperwork on time and get moving. But four, compare more than just the rate. And not all quotes are created equal. Always compare APR and not just the note rate, because you have to factor in the closing costs. But lender fees versus third party fees is another category to look at, and also underwriting turn times and the lender's ability to close on the schedule. A slightly higher rate with faster execution is often going to win in competitive deals because timing is everything. And number five, work with a mortgage broker, not just a bank. Now, retail banks offer limited products and brokers offer options. As a broker, I can shop multiple lenders simultaneously. And we can also pivot if underwriting guidelines change or some new information comes up during the loan process. But you can also match the loan to your long-term financial strategy with more options. And in competitive markets, flexibility always wins. So let's look at number six, common mortgage myths that are busted. You need 20% down to buy a house. Not true. Your lowest rate equals your best deal. Often false. All lenders are the same. Absolutely not. And the structure of the loan matters as much as the price. So here's the final thought. Winning in a competitive market is about preparation, clarity, and execution. And borrowers who understand the process and work with the right advisor consistently secure better terms and smoother closings. And that's what I'm here for. So please visit my website, billraponline.com. You can figure out how to get a hold of me. We can talk more about your situation. Have a good day.